Hey, it's Rav. Welcome to the Everyday Investor, the hottest investment show in the world. That's right, I said it. I don't care who knows it. Listen, we all want to grow our money. Money is not the most important thing in life. Relationships are, but money can help. And it is wise to be able to grow our money. And so that's what this show is all about. The challenge is often we take our precious time, we go to work, which is a good thing, we get paid in order to eat. But imagine a life where money could make us money, we could work a little less if we wanted to, and then we could spend that time with family, friends, being involved in something benevolent like a charity. And so every single week we bring different everyday investors on to teach us, everyday people, how to become everyday investors. You could become an active investor, you could be a passive investor where you're just partnering with somebody who's doing the work, all sorts of good things. This is going to be a great show. Don't go anywhere. We'll be right back.
There's a series of developments and government decisions which makes it a unique buy. So when buying in Calgary, prices are half the price of Toronto. There's only 10% deposit as opposed to 20%.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey, it's Rav. Welcome back to Everyday Investor. We're talking today to my good friend Costas. He's teaching us how we can make money investing in pre-construction condos. Costas, thank you so much for being on the show with me.
Hey, Rav. It's always a pleasure. Anytime I get a chance to talk to you, see you, it's fireworks, and I'm looking forward to today. I just got back in town, and I have some exciting news to share with all our listeners and viewers.
Yeah, I mean, I know you got back from Calgary and you're saying it's, everywhere else in the world, perhaps the economy is not so good, but you are telling me Calgary is good. And we'll talk about that in a second. But let's start right from the back here. What does it mean to invest in pre-construction condos? What does that mean?
Well, what you do is you're actually buying something that has yet to be built. It's literally what it says. You're buying pre-construction process. So we're actually selling a floor plan and a dream, and together we make it a reality. That's what I like to tell people. So realistically, what we do is we invest in an idea, not a hypothetical one, a real one, projects that are being approved, projects that are ready to go, but we sell the majority of our units, people like myself, prior to construction starting. And why is that a good thing? Well, because we can forecast condo growth price-wise based on multiple criteria that we become masters of analyzing, we know what projects are going to do well. We know that what developers are going to do well. And that's where we put our clients and we let them invest, as we do ourselves, before the construction process actually begins. And that way, they can accrue a maximum amount of appreciation before it is even built. So when your condo is ready, you're well ahead of the game, and that's when the bulk of the return happens.
And so I'm buying something today at today's price, but by the time I occupy it or rent it out or whatever the case, it's already increased in value significantly in the 3, 4, 5 years. So says history, generally speaking.
So says history, and statistically, we are the best vehicle in real estate for investment, and we have destroyed all other aspects of real estate over the past 10 years and more. And what people like myself, we like to do is we like to be on the cutting edge. We like to always look for new opportunities. And I am going to pitch a fantastic new opportunity that I have personally invested in today.
Okay, so this show airs all across Canada, and then, even more specifically Ontario, and even more specific to that here in the GTA. That's where most of the viewership is, and you're talking about Calgary. So are you, which, obviously it airs there as well, but are you finding that a lot of people here in the GTA are investing like you in Alberta?
The last couple of years, we've seen a big push to Alberta, and the reason this started was it was twofold. One, pricing here in the Golden Horseshoe has become quite expensive, and we've seen almost exponential growth over the past 3, 4, 5 years. And number two, Calgary's really booming. And we'll talk about why a little bit more. I did a lot of research on this before I put my own money in my clients. But Calgary is really coming to the forefront of Canada. It is number 3 or 4, depending on who you ask, livable city on the planet. It's the number 1 livable city in North America. And it is actually growing population-wise faster than Toronto at 4% a year. And like you said earlier, as the majority of the world saw real estate chaos with the drop in sales volume and drop in prices, Calgary was actually up over the past 12 months by 26%. So they are the golden boy right now, countrywide, North America wide, continent wide, and we are getting in ahead of the game as that train is just going one direction.
And you know, we'll talk and look at some numbers here in a second. And, you know, interest rates, the way they are today, it's kind of irrelevant to this investment because I don't need a mortgage until 3, 4 years from now. And by then, you know, hopefully things have come down. But that being said, let's just pivot for a second, Costas. I mean, you teach 70,000 realtors in the Toronto Real Estate Board. You know, you have your pulse on the market here. What are your thoughts, without looking into a crystal ball? Here we are at the end of 2023. What's happening? What's going to happen with interest rates? Could they continue to go high? Is the worst yet to be seen? Are we done? What does Costas Kivelos think in terms of the state of the economy and where we're going in the next 6, 12, 18 months?
So I've spent a lot of time studying interest rate cycles, studying patterns of the market, studying appreciation, depreciation, seeing what really is behind the scenes, and amassing my own educated opinions on the matter. We are done interest rate hikes. The Bank of Canada, over the past 20 years, they've been 5 significant rate cycles, and every single rate cycle, they did the exact same thing. They were late to introduce interest rate hikes to combat inflation. Because of them being late to the game, they had to overreact. And as a result of that overreaction, they had to drop rates once starting to drop them quickly, harshly, to at or below the point where they started raising them. Now, I don't think we're going to go back down to 0.25%, okay? But when you hear people telling us that rates are going to be higher for longer, they're not going to be where they are now. They're going to be between 2 and 3%. And that is going to occur probably by the end of next year, if not the start of the following year. So a little bit of history and precedent. And like you said, I do have my finger on the pulse of the market. After 3 rate pauses earlier this year that started in late 2022, we saw a significant uptake in real estate action here in the GTHA and across the country for the months of April, May, and June. Significant. I saw 400% more action with our team as opposed to January, February, March. And then with the rate hike in June, we saw it slow down, and then we went into the traditionally slow summer months. We have experienced a series of rate pauses now. We are going into the winter months. I predict another rate pause on December 6th. Because the Bank of Canada was quoted that one of the reasons our inflation was so high is that we, the consumer, were too eager to spend the higher inflated prices. Now, I don't know about you, but we need gas and we need food, but we're going to leave that one and we're not going to touch it. We won't get opinionated. But talking facts, because of the comments that the BOC has made, don't expect a rate drop in December. They wouldn't do that right before holidays and holiday spending. But where others are saying expect the first rate drop in the spring, I expect a rate drop on January 23rd. I am calling it. First rate announcement for 2024, a rate drop, and then we're going to see a drop of 2+% over the course of the year. As soon as that happens, expect the busiest spring in real estate that we have seen in over a decade here in the GTHA, and expect prices to skyrocket. And for that reason, consider this a public service announcement to our viewers. You need to ask yourself, can I afford Southern Ontario right now? Now, today. And if the answer is no, then you need to come to grips that if you don't make some decisions, you're never going to be able to afford Southern Ontario, ever. And that's why we're introducing a new market to invest in that will be a gateway and allow you to get in and then potentially come back here and get in at a later date.
So yeah, and we're gonna talk about that. You're saying what you're saying, Costas, even though, and when you study the history of those 5 rate hikes, did they ever get to what their goal was? Because the goal is 2%, inflation. We're not there, we're, 3.5 to 4. So regardless of that, you still feel like rates will come down. And in those 5 cycles that you mentioned, did they ever get to their projected goal?
1/3 of our current inflation and inflation for the past year has been a byproduct of the interest rate hikes themselves. So what they are using to fight inflation is causing inflation. It is similar to chemotherapy and cancer, how you're poisoning the body to get rid of the cancer and you're killing yourself and hopefully you don't die and you survive from the chemo, right? It's a similar scenario. So 1/3 of our inflation is caused by said interest rate hikes. But another major factor is oil and gas prices, because diesel and fuel is used to transport every product on the planet. Okay. And in this new world that we live in with international and global trade, an example is you get peaches picked in Georgia, they're canned in Asia, and they're shipped back to the United States for sale, right? So oil and gas prices have a major effect. And we just saw oil futures tank over the past month. And that is why we are seeing inflation drop right now. That's why we are going to see significantly lower rates for October and November. Traditionally, December is higher, but I predict it's going to be lower than last year. And that is why the BOC is going to make a move and drop it. We're officially into a recession now. Rate hikes during a recession traditionally and logically don't occur, okay, because the rate hikes have caused the recession. And then once you see oil and gas, basically the big hedge funds pulled out the money all at the same time because everybody was thinking oil and gas futures were going to hit $100 a barrel. Once they realized that wasn't happening, I predict they're going to come down to the high 60s, maybe 70 cents, a lot lower. All the hedge funds have pulled their money out. And that's when we're going to see inflation come down. And yes, we are going to reach low 2%. But until they cut interest rates, it is impossible to get sub 2% or even low 2%.
And I assume
the Bank of Canada is going to have to work with us.
And I assume when you say real estate will go up in early spring of 2024, I'm sure the same thing will happen with the revenue of companies, stock market, yes?
Very similar. Everything's tied. The markets are tied. And whether it's one aspect or the other aspect of the market, it's very difficult to have one aspect of the market skyrocket and the other's not, right? It was ironic that today, actually, the deputy governor of the BOC went on air and said that house prices traditionally have come down with interest rate hikes, but that didn't really happen this time. There was a very small drop and then a leveling off. And she reiterated, those of us who comment on this on a regular basis, that we have a housing shortage crisis. And for prices not to drop at levels we had previously seen with not as drastic interest rate hikes, it just proves the point, 100% no doubt, that we can't build housing fast enough. And I want to point out, because of the drop in sales volume last year, 40% of the 100% of predicted sales occurred, meaning 3, 4, 5 years into the future, the housing shortage is going to get further exacerbated because 40% homes, 60% less are going to be built.
Okay, listen,
it's a perfect age for inaffordability.
Let's take a look at what's going on in Calgary. Let's take a look at your investments and what you're, inspiring people to do now. We'll go take a quick break. Don't go anywhere. We're with my good buddy Costas, teaching us how to make money investing in Alberta. Don't go anywhere. We'll be right back. Hey, it's Rav. A few years ago, I learned how to trade stock options by taking the Theta trading course. My son, my friends, myself, all of us benefited immensely by applying their strategies, and I want you to have that same benefit by taking their course as well. I'm not receiving any monetary benefit whatsoever by telling you this. It's just that, as you know, I believe that knowledge mitigates risk. Visit their site to find out more. Hey, it's Rav. Welcome back to Everyday Investor. We're talking to Costas. We're talking about how we can make money investing in Alberta, specifically in Calgary. Okay, so tell us why you have shifted. I mean, you have properties all over the GTA, but you have now shifted your focus to buying properties, specifically condominium units in Calgary. Why?
Okay, well, I always like to say that I sell condos, not time machines, but I call Calgary the time machine buy. It's as if we went back in time and started buying real estate in 2015, 2016 Toronto. And that's where pricing is. But more importantly than that, there's a series of developments and government decisions which makes it a unique buy. So when buying in Calgary, prices are half the price of Toronto. There's only 10% deposit as opposed to 20. No development charges, no land transfer tax, no provincial sales tax. That's a massive savings, considering 25% of our purchase price in Toronto goes directly to government. That doesn't exist in Calgary. Okay. There's rental guarantees. They're offering management for 2 years, quick occupancy period. So you're not stuck in occupancy for a year. So when you look at these comparisons, it's fantastic. So yeah, Rob, we have 10% down, no development charges, no land transfer, no HST. All you do is pay GST on it. We have rental guarantees from developers, and we also have 2 years management that a lot of developers offer. Everything's geared for the out-of-province investor. And this is when buying real estate.
And so
now when renting out real estate.
I was going to say, so, and how much are we paying per square foot on this?
Well, our square footage is substantially lower. So we're around $500, $600 a square foot at some projects. It's really, really a great opportunity.
Okay, so $600.
Like, I'll give you an example. Yeah, I have a project in the suburbs that are in the 600s per square foot. I have the most luxurious building in the city. That's $800 a square foot. But still, it's half the price of Toronto. And here's the thing. Rents are comparable. There's 2/3 to 75% of Toronto rents, but prices are half. And here's an important thing we need to know. No rent control, no landlord-tenant board. You get a bad tenant, they're out in 14 to 28 days. You can ask for security deposits. You can put no pet clauses if you've just brand new renovated or don't want any pets. It's really a province that puts logic first and puts the business person and understands them and takes care of them. And that's what's really driving the appeal for investors.
And you said there's no rent control.
No, there's no rent control.
As opposed to in Ontario.
Yeah, anything under 2018 has rent control.
And so you just flew back like literally minutes ago from there.
I did.
Yeah. Is that some swag you're wearing right there?
I am. I partnered up with Truman Developments. They've been building in Calgary since the late 70s, early 80s. I met both generations. I met the twins, which are running the company now, and I met the father who started it. And I've been lucky enough to be selected by them. It wasn't easy, though. I was vetted. And I'm the 7th realtor out of Ontario that'll be handling the vast majority of their business. We have platinum access to their projects before everyone else. Great incentive, great guarantees. And basically, we have access to a spectacular pipeline. And we're working with a developer who has never not finished what they've started in decades.
And so, Costas, we're going there. Like you say, you can get same rent for half the price, generally speaking. But you're still promoting, you're still feeling like GTA is a good buy for those that can afford it, yes?
100%. Don't get me wrong. If you can afford the GTA is the blue chip of Canada. Home prices in the Greater Toronto area double every 10 years. People don't know this. Every 10 years they double, and they will double. But it is out of reach for most. And in the next 5 years, it'll be out of reach for almost everyone who hasn't already got into the market. So what I'm pitching is an alternative to Toronto that's following in the footsteps of Toronto, that allows us to predict its growth, okay, is fundamentally strong from all levels. Calgary is not the oil boom and bust town of the early 2000s. In 2009, they set a 10-year plan, followed it to perfection. They're only 25% dependent on oil, where they used to be 75, and they're the fastest growing city in Canada and rated third in the world for livability. There's reasons behind that. So it's a great alternative to Toronto, almost like Toronto's younger brother, following in the footsteps of the older brother.
And tell me how this rent control works and for how long is it? So how does that work, the guarantee? I mean, that sounds very appealing for an investor.
Okay, so an example of this is what Truman likes to do is, because the majority of their investors are from out of province, what they offer is they offer 2-year property management. Because besides being the largest developer in Calgary, they're also one of the largest rental companies and management companies in Calgary as well. So they offer 2-year property management. They offer a 2-year rental guarantee, depending on the project, and the location of the project depends on how much rent they're offering, okay? And they basically take care of it for 2 years. So as an out-of-town investor, it's completely hands-off.
And after that 2 years, if that tenant wants to stay on, I can still use them for the property management, although I'd have to pay a few bucks.
You could. And what another thing is, you can also Airbnb your property in Calgary at will. Okay, it's very pro-landlord, very pro-business as a province as a whole. And I actually had a team member that moved out there forecasting of how busy we are, and they're going to be licensed out there and handling a lot of that. So you can Airbnb it, you can opt out of the rental program, it's not mandatory, and you can handle it yourself. And listen, we need to be honest. Truman Homes and any developer, their rental guarantee is actually lowballing the potential rent because they're not going to lose money. So if you can get $3,300, which was estimated at my unit that I purchased downtown, realistically, I'll be most likely getting $3,700, $3,800 if I did it on my own.
And with 10% down, I have a 90%, mortgage, if you will. Do they make sure? I mean, obviously, different interest rates fluctuate here and there, but generally speaking, I won't be out of pocket with the rental guarantee?
You won't be out of pocket, and that's the thing. And what happens is there's a few lenders now that have started to lend on appraised value for pre-construction as opposed to purchase price. So you're still putting 20% down for your investment property, but you're using equity that's built up over the construction process to piggyback on that down payment. So you're still getting an 80% mortgage, but it's 90% of the money from out of pocket's only 10.
Out of pocket. Okay, great. Which, on a $400,000, $500,000 property, $40,000, $50,000 to be in the game. And these projects, I always say longer the better. How long do these ones take?
Well, Calgary is a tale of two cities when it comes to pre-construction. There's projects in the suburbs, which are up to 5-6 stories, okay? And they take about 3 to 3.5 years to build after signing the contract, because we're all first round. That's where we're first access condos. And then there's downtown properties that are proper towers that can take up to 5 years. And what I did is I hedged myself by bets. I bought one in the suburbs, one in the downtown corner.
And how does the 10% deposit structure work? Is it 10% right up front like today, or how does that work?
It's staggered, and depending on the project, it's pretty much rule of thumb is you're going to put $10,000 down on signing, same as Ontario. You're going to bring your balance to 5% at about the 3-month mark. So as opposed to 30 days, it's 3 months. And then you're going to do the other 5% at the year mark. So it's 10% over a year. But here's the thing, 10% there is 5% here.
What do you mean by that?
So because it's half the purchase price.
Got it, yes.
So when I purchased 2 condos at 10% down, it was really half of one down payment here in Toronto.
Costas, love what you're saying. Your information's right there on the screen. People can reach out to you for more information.
anytime they can. I love to talk about it. I love to pitch it. We have some great recordings of webinars we can send or do Zooms. And remember, by putting 10% down, your returns are doubled. So where we were generating 250% returns here in the GTA, we can generate 500% returns in Calgary if everything goes as planned.
Costas, love having you on the show. We'll have you back. And again, thank you so much.
Thank you. Nice talking to you as always, Rob.
Yeah. And now it's time for our teaching tip of the week.
Hi, it's Darren Mitchell, and this week in the teaching tip, I want to answer frequently asked questions we get about infinite banking or infinite banking policies. Number one, can I use corporate money or corporate dollars? And the answer is absolutely yes. Now, I'm going to put a little caveat with that. Again, talk to your wealth coach, make sure it's structured properly. Ideally, we want a holding company, not an operating company, but we can roll it over. But yes, you can use those tax-efficient corporate dollars to fund a life insurance policy, an infinite banking policy inside the corporation, grow it tax-free, access those loans tax-free for the business. Death benefit's going to flow out tax-free, and the death benefit, all or most of it, will actually flow out of the corporation direct to your family, assuming they're going to inherit the shares, completely without tax or almost no tax, depending upon when you die. So yes, you can use corporate dollars. The next question we get is, do I have to take loans against an infinite banking policy? Absolutely not. The policy on itself, standalone, it's a great asset that's going to grow tax-free. It's probably going to cash value right now. You're probably looking at 4 to 5% plus tax-free growth, plus the death benefit. So you don't necessarily have to take a loan. If you want to take advantage of those opportunities, you can. Some people just use it as their emergency/opportunity fund, and if the opportunities don't come, it's just a great place to store money all on its own. The next question I get is, Darren, what if I'm uninsurable? Well, if you're uninsurable, all you need to do is go down the street, find some guy that looks insurable, and ask him for his health. Well, no, you can't do that. But what you can do, let's say you're uninsurable. Do you have a spouse? Do you have a child? Do you have a business partner? Someone you have a connection with, ideally family member or business partner? You can actually own an infinite banking policy on that individual. You own it, you control it, you access the loans, you cancel it, take the money back, you benefit from the death benefit. Everything about the policy is yours. We just substituted who the life insured is. So the answer to that is yes, you can. Another question we get is, Darren, infinite banking policies, they sound too good to be true. Like, how come everyone isn't doing this? Well, we do get that question a lot. And the answer is the people that know about it are doing it. If you look at what the wealthy are doing, if you look what the big corporations are doing, what the bank themselves are investing in, it's high cash value life insurance. So we like to tell people, once people know about it, they tend to do it. But the banks can't sell it, so the banks aren't going to promote it. In Canada last year, over $1 billion went into cash value life insurance. So it's not a small thing, it's actually huge. The next question we get is, Darren, what if I go bankrupt or get sued? What happens to my infinite banking policy? Well, if it's set up properly and it's personally held and you get a family member as a beneficiary, you could have creditor protection. You could get sued or go bankrupt and have $1 million cash value, and the creditors won't be able to access your cash value. Again, set up correctly, a couple things, but if you know what you're doing, you can set it up so you have creditor protection, bankruptcy, lawsuit, that money's protected, allow you to rebuild your life. That's it for this week. Thanks for watching.
And thank you guys for watching. Without you, we would not have a show. Make sure you go to everydayinvestor.com. There you can see some featured episodes, things that I invest in personally, like land development, things like stock options. It's right there on the website, everydayinvestor.com. You can also sign up for our weekly episodes brought to you directly into your inbox. You want to be able to do that, and then you just want to be able to go to any of our shows via the YouTube channel through the site, so you can watch it on demand, any episode that you want. I've been doing this for 20 years. We thank you so much again for watching. We'll see you next week. Same place, same time. Honey, I love you. I'll be home soon. Bye, everyone.